The next question is from the line of Abhijit Akela from Kotak Securities. Please go ahead.
Yeah. Hi, good afternoon, Siddharth. Thanks for the opportunity. Just on HALS, so what about 701? I didn't hear much about that in our recent discussion. So, are we selling any of that, or is that sort of not on the agenda as of now?
701, we are already at 70% plant capacity utilization. We are exporting to Europe, US, you will see very shortly. We have also exported it to China, where there are already, I assume, 4 or 5 producers, and India, of course. So, it is a very good product for us, and we aim, looking at this, if this continues, very shortly we will have another facility to make 701 in our subsidiary.
Okay. The reason I asked is, I thought in the opening remarks we had mentioned that this quarter we reported sales only for 770. Is that only from CFCL? Is that what we meant to
In subsidiary, there is no 701.
Okay. I get it. Got it.
Sorry.
And
thank you.
Second thing was just, I'm sorry if I've missed this in the past, but just in terms of year-on-year and quarter-on-quarter, possible to help us with the breakdown between volumes and prices for the quarter?
Yeah. Abhijit, on year-on-year basis, it's largely volume driven. In fact, realizations have offsetted the growth. And quarter-on-quarter basis, it's fairly steady. So on annual basis, we have seen a decline in realizations, and that has offsetted the growth. But volume has pulled it off.
Got it. Thank you so much, Siddharth and Pratik. All the best.
Yeah.
Thank you. The next question is from the line of Rohit Nagraj from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity and congrats on decent set of numbers. First question is in terms of our product pipeline. So now that the HALS series has been completely tapped and there are a few more products for which we are doing the CapExes, how does the pipeline look like, and which and all are the areas which we are currently working on in terms of user applications? Thank you.
So in terms of future product pipelines, we just discussed 2 large CapExes totaling to 300 crores. And again, the sector remains performance chemical, intermediates for pharma, agro, water treatment, and FMCG chemical. So the universe remains the same. And 300 crore additional CapEx is planned, which will be done within FY25 and a little spill over to FY26 first half. And in the meantime, of course, whenever there is more opportunities which come up, because we are working on few more products in R&D and pilot, as and when these go ahead, I will discuss it during the earnings call.
I understood the first part. I was referring to the products which are currently in, say, R&D and pilot. So which areas we are looking at in terms of the user application? Will it be the same areas as currently we are working on, or will it be different areas in terms of user segment?
No, I think they are very similar to performance chemical, agro intermediates, pharma intermediates in particular is big for us. So I think the segment remains the same for us.
Sure. And second thing, in terms of the subsidiary, if I recollect clearly, probably the space that we have, we can accommodate 1,000 crores of capex. Was that the number correct? And we are currently probably having maybe 300 to 400 crores of projects which are commissioned and which are in pipeline. Just a perspective. Thank you.
Yeah, I think you are correct.
Okay. Thank you so much and best of luck. Thank you.
Thank you.
Thank you. The next question is from the line of Arun from Avendus Spark. Please go ahead.
Yeah, thank you. Thanks for the follow-up. So just some bookkeeping questions. What is our current utilization in our core business today, say across MEHQ and BHA and other core products?
So Arun, rather than going product-wise, I'll speak segment-wise. FMCG is highest. It's close to 80%. Performance and pharma is in the range of 65%. Performance segment is little lower because of HALS capacity, which is largely underutilized.
I think just the request is, can you just break the performance into excluding this core as core, which is excluding HALS and our traditional products?
No, so that will tantamount to giving product-wise utilization, which we are not very comfortable with.
Oh, okay. Ex-HALS, if you can, because just wanted to understand how is our...
So ex-HALS, so it's in the range of 70%, which is largely basically the four products, MEHQ, BHA, AP, and TBHQ.
Okay. So, how long will it be taking to saturate this capacity? For that is 70 becoming, say, 85, 90. What is the time frame that we have in mind?
Yeah.
So I think probably I think we will have to really gather this information, and I said that probably by end of this year we will evaluate whether there is a need to set up. I think one of the time it would be, but when it would be the right time to set up additional capacities of these MEHQ, glycol, anisole. We will, I think, take a call in probably the next 6 months' time.
So basically, we will wait for competition. That is what I can infer. Wait for competition before we. That's the idea.
No, I don't know. We are not waiting for any competition. We are waiting for our own evaluation to see whether the market is able to absorb these capacities and what should be the capacities for the next installations.
Right. Understood. Siddharth, thanks. All the best.
Thank you. The next question is from the line of Surya Patra from Phillip Capital India. Please go ahead.
Yeah. My first question is on unobserved cost that would be there because of the new capacities. So could you quantify that? Because my point is, in fact, on a consolidated basis, although we are saying that our new capacities are currently not optimally utilized, and hence there would be a kind of impact that our consolidated business will be facing. But despite that, we have seen a consistent improvement in the margin in the consolidated business. So that means something is really driving, despite the kind of the business challenges that we are witnessing for the industry at this moment. So what is the unobserved cost, and what is in such a situation, what is on the core business front driving this margin sequentially?
So basically, the parent company is doing well. This is again on account of the new product addition, on account of improved yields, efficiencies, on account of reduced raw material prices. So these are the various factors why the parent company is still doing well. And of course, the subsidiary, as you rightly said, it's still, of course, because this is the first working quarter, is at loss because of the heavy duties which we have already on it.
Exactly, sir. Is it possible to quantify, sir, like what is the, let's say, at the EBITDA level, what would be the kind of hit that you would be facing for the new business?
So for subsidiary, apart from raw material, we have incurred employee expense, power and other expenses, which is in the range of 5 to 6 crores.
Okay. And then for the existing business or continuing business, this margin expansion, you said on the revenue front, in the prices front, there is no sequential improvement. That is flat. And on the cost front, sequentially, there is no reduction, rather it is slight improvement or stabilized price. So then is it the volume growth that is helping out to showcase slightly better margin?
Yeah.
The cost is getting
Absorbed, yeah. But at gross margin level, it's fairly steady. 34.4% was RMC for Q4, and this quarter is 34.1%.
Sure.
It's basically EBITDA which has gone up because other expenses have come down little bit.
Okay. And do you see really in terms of the demand recovery or demand for the existing product as well as the new product, is it a kind of sequentially, let's say 10% kind of better or 20% better? Some sense in terms of the demand, the improvement that you can talk about?
No, so the demand is sustainable. You can see on quarter-on-quarter, the volume growth is happening, and of course, we are aspiring to take more and more volumes going forward.
Of course, sir. Okay. Yeah. I mean, I wanted to also have a sense. So whether it is like, what is the intensity of the demand recovery or let's say, demand improvement that you are witnessing? It is sub 10%, better than 10%, or any sense on?
On Y-on-Y basis, if you see the entire demand, the entire revenue growth has only happened on volume increment.
Correct.
The prices have remained lower only, yes.
Yeah. Okay. Sure, sir. Thank you. Wish you all the best.
Thank you. The next question is from the line of Dhara from Valley Quest. Please go ahead.
Hello. Thank you for taking my question. I just needed a better clarification on the third CapEx that you mentioned, which is towards the water treatment chemical, 150 crores is what you have said. Could you just clarify the timeline for the construction and commercialization for this project?
Typically, it is a 10 to 12 month process for us, from construction to plant erection to water trials. So assumably, if we start in September or October, you can add 12 months to that.
Sure. Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Jason Soans from IDBI Capital. Please go ahead.
Thanks for the follow-up. So just wanted to understand one thing. Actually, I was under the impression that all the HALS products are coming through CFCL, but you just mentioned that in the subsidiary there is no HALS 701. So how does that work out? Just wanted some explanation on that.
So there were two typical HALS, 770 and 701, which we originally started in Clean Science, which we started in February 23. But of course, the capacities were very small. But that also helped us to build these large plants in the subsidiary.
Okay.
But 770 we have replicated, 701 we have not replicated.
Okay, sure. So 770 you have replicated. So the sales which we see from CFCL is only 770, the 67 million which has come, right?
Yes, sir. Absolutely.
Okay, sure, sir. Got it. Thank you so much for the clarification.
Thank you, sir. Thank you.
Thank you. As there are no further questions from the participants, I would now like to hand the conference over to Mr. Siddharth Sikchi for the closing comments.
So thank you so much, all of you, for taking time out to understand the company. And I would, that's all from my side. If there are any further questions, people can connect with me or Prateek or Parnekar ji for any offline questions you might have. Thank you so much.
On behalf of Clean Science and Technology Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.